Boom. We are alive, ladies and gentlemen. Thank you for joining us today. Wednesday, 14th of July, 1 p.m. here in Costa Rica. On the dot. Nailed it. Okay, one of the fun things about this for me is the idea of exploration. You know, I've always considered myself, and will continue to follow this route of being a student of pretty much everything. One of the fun parts to being excited about whatever it is you discover along the way is that you're not trying to be right or wrong. In fact, you're equally as happy at both outcomes because it means you've learned something. So what we're going to do is start off kind of just in our open area. Bitcoin, right? This wonderful chart we've been following. And as we follow the chart, you know, there's a lot of really interesting things to be learning along the way, right? Now, in market dynamics, it's really easy to get caught up in the noise of the day-to-day kind of news cycle, forgetting that actually all of this is largely speculation. You know, I wanted to talk about this kind of first and foremost because we go over it a few times, that the assertion of value in something is, especially at a price point, is a level of hallucination which, if you can have any level of choice at that point, it's basically a privilege. Whereas, you know, there is definitely a point where you could be dying in the desert, and if you want water, it cost you whatever you had, you would probably give that up if it was for your last 5 or 10 minutes potentially over the stuff itself. So if you change the context of each situation, the value of something specifically can change dramatically. In this case, to basically making something that was once worthless worth everything, and vice versa. So because of that, it's really easy on the day-to-day to be like, oh, what's happening? Who's doing what? Who's partnering where? And what's going on here or there? This is usually a very closely related side effect to being new at something. So when you first enter an investment or an investment thesis, or even the understanding of investments and investment thesis, what you start to do is you try to do a lot of work really quick all at once. So you start studying all the time, like, oh my God, we've got these moving averages, we've got the volume supply, the signature, the trading ranges, we've got accumulation and distribution. And you pack a lot of your early learning in the first few years. Like when I first started playing the drum kit when I was around 15 to 16 years old, the amount of study that I would do then compared to what I do now for study, which is a lot more playful, there's a really important part to knowing that the monotonous and the rudimentary cannot be skipped, and it's some of the funnest part to go over. And it really has nothing to do with charts, nothing to do with news or the news cycle, or it has a lot more to do with core philosophical concepts. So one of my favorite parts of this discussion, aside from the fact that you start to see the evidence of like the Fibonacci sequence, anyone who likes studying abstract mathematics, which if you like this channel, you'll know that I'm a big fan of understanding some of like the clockwork of the universe. There seems to be something there, conveniently enough. So when we're looking at a chart, one of the things that I find most exciting is actually not the price. The price is an aspect of, let's say a symptom of getting what we know, or what we at least think we know in the early stage of our thesis or hypothesis at this point, before we actually have a thesis, a hypothesis, just a general guess of what might happen, that there is a deeper underlying aspect to what I find valuable. Yes, making a lot of money because you got it right is a lot of fun. I'm not saying there's anything wrong with that. I think it's fantastic. But the exploration, a lot of this stuff for me is not just about the price. So we've been doing a lot of early venture capital research over the last few years, and that has a lot more to do with the people and the people that are building these projects. So when we go into market analysis, especially in the beginning, in the middle, and the end, there's like a 3-part sequence. Now, we could make an argument that the Bitcoin bull market is over. Now, the one aspect I've seen that would fit something similar to this was way back way back, if that's how long it feels. So there was one of these early Bitcoin bull market cycles. Here we go, up to the $200 range. This area here. So back in March 2013, and these are all on linear time frames. And the reason why we're using a linear time frame here is it offers us a bit more stability in the function of time, because that's what we're interested in. Logarithmic kind of condenses the time and makes it look a little bit differently here. Humans seem to think on a fairly linear basis. They think, oh, here's one day, here's the next day, here's the day after. So it helps us to see it like that when we're trying to identify individual trading ranges and their time. So from early 2013, December 2012, let's say, what is it, December 21st, 2012, the winter solstice of 2012, you had an 1,800% run up on Bitcoin, which lasted approximately 100 days. From there, you had a nice reaccumulation or accumulation pattern take place of those of studying Wyckoff, and it only took around 200 days. This is one of the shortest cycles that we had seen in Bitcoin's price, and we could be seeing the start of something very similar now, where what we get is not a multiple year accumulation cycle like we did in 2013 through 2017 or from 2017 to 2020. Here, from your buying climax to the first starts of your LPS and SOS regions, you're looking at around 1,200 days. Right. Okay. So this is 200 days is but a fraction of 1,200 days, right? 6 times shorter of a bull market cycle before the next bull market really started, where you had from the top of that range another 360% outside of the growth here. So maybe more than a super cycle, what we're seeing, and I think Benjamin Cohen talks about ideas like this too, and I've talked about this over the last little while, is that we're seeing an extended, and potentially even a much further extended cycle. Right, so if we zoom out now, let's count it out. We're already 40 days into this. This is 200 days. So if you had a bull market cycle that was 200 days, or a little bit longer, 200 days, that would put us in December 21st, 2022, or 2021. Yeah, 2022 already. Jesus, holy moly. Time is flying by, ladies and gentlemen. Okay, so if we make it out to 200 days, we can see that this cycle would be the same length. So this is kind of that potentially boring area that I was talking about, and it may be extended longer. Let's go 200 to 300 days. What if we see a 200 to 300 day intermediary cycle? We've seen it before, and it would actually fit kind of our larger sentiment pattern. This is for the advanced students only. I'm sure you'll have to, if you're new to the channel, where you study a lot of the Wyckoff trading ranges, so you'll have to do your own homework to catch up. But from your selling climax, your first automatic rally, we were originally watching a subset of trading ranges, right? So this first selling climax, we could actually view this as the spring of a much larger trading range, where you have your A cycle here, phase A, phase B, phase C, D, E, and then the breakout here. The breakout still occurred at the same place for both of our trading ranges, the internal trading range and this much larger trading range. And the much larger trading ranges we have seen before, where you actually are getting, again, the fractal or scale invariant nature of, hey, look, here's a trading range, and look, here's a bigger trading range. And effectively, we had that on all the other previous trading ranges that we saw. You saw that in 2016, this moment here, this is what caused the chain of events that would eventually lead to the Arcane Bear being born. In 2016, Bitcoin hit $400 on February 29th. From that moment onwards, once Bitcoin had jumped back above the $200 mark again, and we saw this first uptick, I got really excited. That's why in March of 2017, right when we were here, actually, the technically Twitter we started here. Our Twitter account, here's where we started the YouTube account. I didn't know what I was doing. I was just kind of playing around. But the reason we did that is because of this much larger trading range. But you actually had a much smaller trading range, very similar to what we saw this bull market down at the bottom here. And if you've been in the bear den for quite some time, you will know that I did exactly this in Matic, and was one of the reasons why I had and Fetch, why I had such a hard time calculating such a big move, is because we were charting a portion of what became actually a much larger trading range. So you can chart a subset of a trading range. So this is what I mean by scale and variance, right? Is that you don't have just one trading range. You can zoom in on all different time frames and can consistently find evidence of these patterns repeating themselves. So here we are with our take of 2018 through 2019, the original the trading range within the trading range. What's valuable about this now is that when we're seeing these shorter time framed market cycles, we might see something very similar to what we saw between the first market moves in the early days of Bitcoin, where you have a big market cycle up and a big market cycle down. And this would really well align with our SOS and LPS. Back here, we kept talking about how we thought we'd see a big LPS, and we didn't see it to the point where we thought this might have been it. I'm not totally unconvinced that this isn't a total SOS, a sign of strength, and a big one too, because look how big this trading range is. This is ultimately a 1,200-day trading range. It is not a small area of accumulation. It is extraordinarily large area of accumulation, effectively. So could this bring us and return us to an LPS range here, given that shorter time frame, and actually see a much the final kind of wave upwards that could bring us like maybe $120,000, $140,000 before we see another market cycle down, maybe all the way back down to this area. And then have a longer area of accumulation where it's like maybe 2 to 3 years of accumulation between, let's say, 50 and 100,000 or 50 and 60,000, 50 and 90,000. Just guessing at those, we can't tell. Now there are some ways that we can tell, at least make good asserted guesses. So what I wanted to try to do today was include the complex nature of why I like things like charting, scale invariance, understanding that accumulation and distribution are largely based off, let's say, the human's condition to speculate on anything's price, and that there's no real scientific nature for that, but there is a fair amount of nature to science, if that makes sense. It's a lot of things start off as a more like good science usually starts as more of an art form than a science. And then afterwards we figure out what the hell it is we were actually doing. Like music theory didn't come before playing the instrument, guaranteed, right? Playing the instrument came first, and then we figured out what the hell we were doing. And also, often that's the angle you should take, is you should take the angle of figuring out what you're doing. And now we have this entirely new DeFi emerging technology sector budding, and they all fall under this preface of asymmetric returns, which is that you have a lot of room for upside and very limited room for downside. In each one of these cycles, you could have executed the exact same strategy, which is just buy consistently and basically ignore the price. And if you see astronomical gains, or readjust, buy yourself whatever you need, and continue about your life the way you regularly would, building and consistently growing. You can have repeated this in every market cycle of Bitcoin today. Now, not all of them are the same. Not everything will survive. Who knows? Maybe even Bitcoin dies one day, although that's not what I'm betting on. I do need to preface that the underlying thesis itself is now cemented in two key ideals. Number one is that if you only invest so much and you know that it's very volatile and you could lose it, that's it. It's not about how much you can make, it's about how much you're willing to lose. Like, very specifically, people always say, oh, well, don't invest more than you're willing to lose. No, literally invest only what you're okay with losing. This is how you look at it. Because if you make a small investment in Bitcoin back in 2017, if it was $100, it could have yielded you great results, right? Today, that would be worth around $30,000. Same with Ethereum. And if you're consistent with these strategies, so every day when I go through this, or not every day, but a lot of what I'm trying to do is reiterate to myself the thesis that has been the most productive, which is understand where we are in the market cycle, hugely important. Know that these market cycles can take a significant amount of time. 1,200 days on average is like a good one. We've done a lot of that by going over the S&P 500, looking at other major markets. So today, right, we see here's a nice trading range. We saw this, we thought it was going to be a falling wedge. It didn't break down. It actually broke up so far. We've seen an enormous amount of strength because they're basically just printing dollars. So we know that the kind of out part of the thesis of where our money comes from is being totally distorted. Real evaluations are nonsensical. GameStop, it was perfect proof of that. Bed Bath and Beyond and AMC were proofs of the realization that these markets are speculation. There's no such thing as manipulating the market. There's those who have the money and those who want it. And generally, if you've got a shit ton of money, you can move the market. Like I've moved markets, especially back in 2017, or in early parts of the 2020 cycle, because they're so small, they're so illiquid, and you have this massive growth. There's a very thin fire exit, and what do you end up getting? And this is the same across all stocks, across all commodities. This is not inherent to just the Bitcoin cycle. So we do know that there's a macro story taking place here, which is also one of the reasons why Bitcoin is so valuable. But understanding it is, I think you need to take the Bitcoin glasses off totally and go, okay, well, look, this game of speculation has been taking place for a really long time. Let's at least say 150 years to some type of generalized market. So what it's really good to do is take this idea and go, okay, well, let's retrospectively reverse time now. Let's see what's happened in the past. Not because the past is going to help us predict the future, but it can help us understand how people feel about moments of fear and moments of certainty. So in 2001, the big stock market crash occurred for two main reasons. We have the dot-com bubble, huge overvaluations. I think it was valued at like trillions of dollars at that point. Maybe where Bitcoin and the rest of the sectors today, I'd have to double check on the numbers, maybe quite a bit higher, I'm not sure. And then you had a 9/11 incident, and the markets went down every day afterwards for almost 6 months. It's a very, very long, kind of slow downtrend. Everything was slower. People were only using like actual phones that had cords for the most part. And then the tech actually started to develop. You saw, again, very low interest rates as time went on. You saw an actual use case of most of the technology being adopted, and the growth and the kind of the peak out and the break, which we could be very easily consider political malfeasance, or let's say banking malfeasance. I don't know. Sometimes people don't appear to know exactly what they're doing. I'm not sure. But anyways, the 2008 crisis. So both times to make the best investments in the S&P 500 have been around a month or two after a crisis. So we took a very similar standard, or at least those are the best days to start acquiring more assets. So even though the S&P 500 is not Bitcoin, what I think it does, it gives us a really nice functional standard for time itself. Here you have that 20 to 40 year process, and then the bull market that started afterwards. So here was one of your first trading ranges. We see a big uptick. You know, we could still go quite a bit higher for the S&P 500 here before coming back down and forming a bigger trading range. Again, we don't know what's going to happen, but again, one of the underlying portions of this story that we need to keep in check is that right now, since the 1970s, the monetary printing has just been given the ship to the financial powers, right? The governments around the world, people who tell you should vote for them so you can spend that money, they can spend that money on giving you free stuff or something. Anyways, that's a simplified version of this. So when we see that the monetary supply and the growth of the assets are very similar, we know that this is kind of a function of inflation. But we also know that the function right now is largely deflationary. Again, we talk about this on every episode, but the point of it being, I could have never done back here in July of 2020, or sorry, 2000, just July 2000, I could not have done really what I'm doing right now, which is going live with fairly high quality, with a nice camera beside me. I can switch between views at the flick of a button. I can be like, hey, sign up to our social media links down below. That was never really that easy to do, but here I can just like touch a button and I'm my own media center effectively. That's crazy. That amount of deflationary power is unimaginable. What it's been able to do is I can randomly do this. That's pretty fantastic. In fact, in the early 2000s, I could not have really imagined how easy this would be. I remember how complex thinking like setting up regular stuff, like anyways. So it's not only gotten financially easier, it's gotten technologically easier. You can do it with you can pick up your cell phone, do it with your cell phone. So because of this, we have a really interesting battle that's taking place. And this is where, again, I like the conceptual aspect of this story more than what's going on in the day-to-day news. Is the Fed raising interest rates? How much money they're going to print? They've already told us since the 1970s that they're just going to inflate the monetary supply. And I am going to assume that it's because that technology is so inherently deflationary that you probably got to kind of do it anyways. I'm not sure what the best road is. I don't think everyone's working out of total malfeasance, although it definitely appears that way sometimes. Sometimes it just appears as if the system is totally controlled by corruption. But I think often the corruption can just be kind of stupidity, or like where we have fail safes for things in our mind that's like more like, hey, you don't even, whatever. It's a whole nother. I suggest reading the books Persuasion and anyways, read the book Persuasion, the influence of psychology. Fantastic book, but I think it's probably just general people's autonomic systems running, where they're just being without thinking a whole lot about the consequences of some of the things they're actually doing, like printing enormous amounts of capital, lending it to businesses that are fucking absolutely failing, like the banks that helped get us into this mess, which was such a horrible idea, but that's what they did, and that's what they've been signaling that they're going to do. And I don't see that this is going to stop. In fact, I don't think that they can stop. The only way that it can stop is if it breaks, and I don't think they're going to let it break by stopping. So as the monetary supply grows, the asset layer appears to grow as well. And we've gone over this before. People are doing, a lot of people are buying property abroad. That means the inflation doesn't necessarily just come home to roost in the US dollar, because the US dollar is moving to other countries as well. So because of these two extraordinary forces of, oh my God, they're printing trillions and trillions of dollars, the asset layer is going up. We've seen a large drop in underlying prices for things like lumber and materials. A lot of people were building at the area of the pandemic because they had to spend more time at home, and because they were at home more often, they thought that they should build something that made being at home more often more enjoyable. It made sense. Inflation happens when it's much like the fire exit to a movie theater. If somebody else, oh, fire, like all of a sudden everybody can't get out. That's where inflation comes from. Inflation comes from all of the money being directed at a particular asset at a particular time. So people are like, oh my God, but why is Bitcoin not performing super well if we're seeing all this inflation? Well, no, that's not how inflation works. Inflation doesn't just happen everywhere all at once and run amok in a global society. In the Weimar Republic, it was drastically different. You didn't have the ease of capital to move around the world and just plop itself in a different country in the hundreds and hundreds of billions of dollars. But now it can do that. So the capital flight idea is changed this game. I think it can go much higher. So we're keeping a close eye on these smaller trading ranges. We're trying to keep a macro perspective going, because very quickly we could see this whole market dip down, and we could see it basically end for the S&P 500. Now, I don't think we're near the top, because this is a top of their ability to imprint money, and for the inflationary and deflationary natures of technology to basically battle themselves out here. And that is a story I'm not going to pretend to know the answer to, that's for sure. So in light of that, I hope you've all enjoyed the first part of today's philosophical rant about the markets. I'm always kind of learning, so I don't really know where we're going to go. And I think that that's the part of the fun that everyone should discover here, is that there's something really interesting taking place inside the world of human consciousness, and the markets do not escape that. So, oh yeah, here, a quick little update. Soulrise had a nice jump. For any of you guys that had joined to that one, it's up 50%. Fever was off the charts. I'm sure you guys saw that one. Just to take a look here. Oh no, I closed it. No, there it is. What from there, even where they're at right now, that was fantastic. A cool 5x at the top. There's like almost a 13 or 14x since the growth of that one. Really cool project. Again, before I was learning more about NFTs, and I don't know if I'm sure you heard the joke, like they're like, well, if you know fantasy football, I'm like, man, I have never once had a fantasy with football in it. Like, you're gonna have to tell me more about it, because I understand that games are valuable. I understand that the things people like as collectors and sports fans are valuable. I don't, because I don't know those worlds, but I see how other people do, and so I'm always interested in that topic too. The things that I can see that are valuable because of nostalgia, like why I like having a drum kit instead of a drum pad or something like this, or why I would prefer to play a guitar instead of a synthesizer. I just like the nostalgia of the instruments that you can hit and have some real life tangibility to. But anyways, the point of this is, I'm not shy to explore those worlds. So that one worked out. Mercurial was a really interesting one. There's a huge amount of growth off the launch of the IDO. Again, what we need to remember is that we're in the middle of a bull downside. So there was a nice like 10x off the launch from the IDO price. And then we've seen a big retracement since then. And this is generally normal. I guess it depends who the investors are often, of what type of growth cycle you see and their interest in the product. Just like anything, when you're looking at big projects versus small projects, you're dealing with a different level of like composite operator, right? So when you're looking, Avalanche had some signatures like that. Ethereum did in its early days. Over time, they become less or owned by a lot more people, right? I think what's interesting about when we're watching this stuff is just the amount of unique holders there are, right? Like watching the unique growth go from like hundreds to thousands to maybe tens or hundreds of thousands of people. For instance, Fever has a user base of around 1 million people on their platform and only 4,000 holders. And you can imagine you'd want each one of those Fever participants to be a holder, even a small amounts, to probably get rewarded for doing stuff on the platform. You can win the token. It'll be an incentive program for them to get people to play the game. I mean, we do that with the Arcane Bear token as well. Hey, we're going to give you guys like $50 in free Arcane Bear token a day or something. So we see that these strategies work, and from an internal layer, it makes a lot of sense. I've always been surprised that companies like Netflix don't already have that built in, where you could pay for a subscription and also just pay every month to be buying more of their stock. Any level of participation. But yeah, it's the early days are always volatile with anything. So patience is a good interest. That's why when we go through these like big stories of time, the importance of understanding what a few years looks like on an accumulation cycle, hyper important. Okay, so on an overall market perspective, though, it definitely looks like we're in for a temporary end to the market. And like I went over with Bitcoin, what's fun though is that it might not last that much longer. If we are already, let's say, speculatively speaking, around 58 days into this, we only have around 150 days more to go. So if we're in the bull or if we're in the bear market type of cycle, I think we're already a quarter way done that bear cycle. I do not believe that this will be a 1,200 day bear cycle. If it's a short, it'll be a short, maybe 200, maybe 220 day bear cycle. That's my personal thought and opinion right now. Maybe it's even shorter. It could be shorter. I speculated that maybe by September it could be back on the move again into like, if we close above 44 or something, if we close above this trading range we've been in, it changes the whole story. So effectively, you could see that happen very quickly. It could jump back down to 22,000, jump right back up to 35,000. You could even maybe think that this was a spring to some degree in a much larger trading range. Again, the variables here of how trading ranges work are really, really about understanding the idea of what scale and variance looks like. I can't stress that one enough. And I think it's one of the most interesting topics. And again, that extends into Ethereum as well. The Ethereum market is going to move alongside Bitcoin's market. It's just it seems simple. Ethereum has a lot more potential room for downside in this LPS feature. Not necessarily the case though. Again, EIP, if they're going to lock up the supply, we'll know how much the supply is. We could see again the extension of around 200 days before we see any upside more movement. But I wouldn't, again, if you're a new investor here, just be consistent. Just focus on a long-term consistent strategy. There's no need to like, oh my God, I'm gonna buy in here, I'm gonna sell here, and buy here and sell here, and like buy here and sell here. No, the reason why we study all this is so that we don't do that. So because look, you should have just been buying all the time. Even if it was at the high, if you do it over a consistent amount of times, you actually end up buying a lot more of the low than you do of the high, just in proportionality here anyways. So it's really, really important to understand that long-term function. It's super simple, guys. The rest of it is just study, and let's call my happy little thesis today pontification. We'll call it a wrap at that. Thank you guys all for joining us today. This is Tea with the Arcane Bear. Follow, subscribe. If you're new to the channel, please hit that little bell. That way when we go live, you guys will be notified about all this stuff. We'll spend a few minutes of time here. Congratulations, Tio, on graduating and learning how to talk on camera. I'm going to answer a few of your guys' thoughts or questions with my opinion, whatever that's worth, because this is not financial advice, ladies and gentlemen. This is just my story and my journey into my financial discovery and the things that I like about that road to wealth and success, because if it was just about money, I'd be super bored. I've lived in $10 million homes. I've driven $100,000 sports cars. That's not what interests me, although that's nice. The reason why I'm here is because I really like this stuff. I think these are fascinating conversations around technology. So we have coming up over the next few days 4 podcasts with like PerpFi, 3Speak. We're just going out on a rendition right now to kind of broad spectrum, get a pulse from the market in a few different areas to try to help round out some of our investment thesis on the long term. Again, I'm mostly interested only in financial products and services and technologies, but things like Fever, where you have a financial product and service that's meshed into this nostalgia thing, like I'm still interested and learning. So we're trying to develop even further the capability to be as playful and as explorative as possible whilst making things as simple as easy. So what we got, PerpFi, we're going to be chatting with a bunch, Avant-Garde Finance. Who else do we got on the line? Charm.finance. So if you guys want to catch up and do some of your homework on your own before these get posted, because there's a lot of research that we try to do into this stuff. What else do we got in there? Oh, we got a few more, I'm sure. So we'll be seeing that. And then Soulrise, Mercurial, and Fever have been the last 3 of our updates. So for those of you that are in the private group, you have access to all that. But we do also give some of it away for free on the front end of the website. We're trying to develop both of those things at the same time. They go actually hand in hand. A lot of the times what you'll end up running into is you'll have a free content and then a content wall for much deeper dives into the companies, how much money's been invested into them, who's been the investors, some of the data and analytics, hopefully too, of on-chain stuff we're going to be bringing to the table. So that's super exciting. And then, so now we'll take a look at what your guys' thoughts and we'll call it a day after that. Okay. Sorry guys. It's hard. Not, most of my mods are there to help in the morning. I can see that there's been some spam comments. Just try to note that anyone telling you to do something is probably a spammer, or like, hey, this is the best thing ever, spammer. It's that's a pretty easy one. So just be aware of that. This sector. I mean, on Arcane Bear, we actually had to block all comments from being automatically approved so that none of the spammers and scammers get through, because it is an endless supply of bots printing stuff, trying to tell people to go to what's a gram, an app, and tell a stupid nonsense. And you can really tell. Just be aware that anything that you think sounds too good to be true, aside from asymmetry and volatility through time, because that's a very complex subject, they're lying to you. And that, so understand that one. That's a great one. Awesome. Well, I'm just going to leave it at that. Thank you guys all for joining us today. It's Tea with the Arcane Bear. Oh, hey, you always like a little bit of music. So we'll end with that. We'll end with a little bit of music. I'm moving to this. I've rented a house in the city. It's made out of a bomb shelter. So it's all underground and the deck's on top. And it's got this cool like estuary. So there's like a gardens in the house with big, super awesome sunroofs. Anyways, it's super cool. So I'll be moving to the city for part-time here, back and forth between the Jungle Bear Cave and another home in the city for fun, because I miss, city life stuff. But because of that, we've got all this new stuff coming, all these new podcasts, and hopefully a new and more constantly integrative way to share this story with you guys here too. So I appreciate all the support. Give us a thumbs up, and we'll see you again on the next episode. Yes, that's it. That's where we're at today. Everything looks good. I'm at a stage of consistency right now. No need to be hyper active. It's just grow to be patient. We got some time here. That's how it works. Thank you all for joining us. Round of applause for everyone. You've made it through almost the half of another month.